It's time to stop believing this ridiculous myth and start making informed investment decisions. This belief ignores the fact that companies, industries, and economic sectors can behave differently in the stock market. Get ready for some explosive myth busting as I give you 10 ways to prove that not all stocks are the same. First up, market capitalization. Companies are classified as large cap, mid cap, and small cap, depending on their total market value. This has a significant impact on their risk profile and potential for growth. So don't tell me all stocks are the same. Number 2, industry sectors. Stocks come from a wide range of sectors like technology, healthcare, finance, and many more. Each sector has its own characteristics, growth potential, and risks. It's absurd to think that all stocks are the same when they operate in such diverse industries. 3. Dividend versus growth stocks. Some stocks pay regular dividends to shareholders, while others focus on reinvesting profits for growth. These two types of stocks can have very different risk and return profiles, so lumping them together is just plain wrong. Fourth, value versus growth investing. Value stocks are often undervalued by the market, while growth stocks have higher than average growth potential. These investment styles focus on different stock characteristics, further providing that all stocks are not the same. Number 5. Geographic location. There you have it. 10 ways to burst the infuriating myth that all stocks are the same. With such a diverse range of factors affecting stocks, it's crucial to understanding these differences when building your investment portfolio.